Hello everyone. Today we are going to present topic 6. Delivery, clearing, settlement and corporate actions.
The first topic is clearing. Clearing refers to the process of determining obligations and accounting for the exchange of money and securities between market counterparties to a trade. Usually in clearing, a specialized organization acts as intermediary and assumes the role of tacit buyer and seller in a transaction, to reconcile orders between transacting parties. Clearing is necessary for the matching of all buy and sell orders in the market. With a clearing organization, a smoother and more efficient market is produced as parties can make transfers to the clearing organization rather than to each individual party with whom they transact. In Malaysia, Bursa Malaysia Securities Clearing SDN-BHD, BMSC, is the organization which provides clearing services for participating organizations of Bursa Malaysia Securities Berhad, BMSB. It is an approved clearing house under Capital Market Services Act, CMSA. BMSC provides clearing and settlement services for domestic contracts on all securities listed on the official list of BMSB. There are two main objectives of BMSC. The first one is to provide facilities for clearing contracts between clearing participants and for delivering and receiving stocks and securities or paying or receiving payment for participants in connection with securities transactions. The second objective is to provide clearing facilities between clearing participants and their clients. So who are the participants of BMSC? All participating organizations of BMSC are clearing participants of BMSC. There are two types of clearing participants registered with BMSC, which are trading clearing participant, TCP, which consists of the stockbroking companies, and non-trading clearing participant, NTCP, mainly comprises of custodian banks. Now let us look at some of the rules of BMSC. First of all, a company must first become a clearing participant by making an application and complying with the requirements of BMSC in order to use BMSC's facilities. Besides, BMSC provides clearing services for listed securities of BMSB, but a clearing participant may request BMSC to provide these services for direct business. Furthermore, in order for BMSC to perform its functions, delivery and settlement for the securities transactions must be effected within the specified time frames. When a clearing participant is unable to fulfill its post-trade obligations to BMSC by the due date, a default in delivery arises. Action can be taken by BMSC so as to effect delivery. In addition, each clearing participant must have an account for the purpose of financial settlement services. In order to have only one final net position for each clearing participant, monetary obligations of clearing participants are pooled and offset with each other. When there are insufficient funds in the account, a default in financial settlement arises. Actions can be taken by BMSC if this situation arises. Last but not least, securities traded are prescribed by the stock exchange and are delivered unsettled in compliance with the rules of Bursa Malaysia Depository SDN-BHD. The clearing participants have to pay a clearing fee to BMSC. Another two steps for trading, which are delivery and settlement. It will talk about what occur after a trade has been executed on the market and client has been issued a contract note to fulfill the transactions entered. Settlement is the completion of a transaction, wherein the seller transfers securities or financial instrument to buyer and the buyer transfer the money to the seller. As all securities are in the CDS system, so there will be no actual physical delivery or receipt of scrips, but a debit or credit to their CDS account which will take place on days specified in the FDSS. So what is Fixed Delivery and Settlement System, FDSS? FDSS is a system established by Bursa Malaysia Securities Berhad, BMSB, to facilitate clearing and settlement activities. Under the FDSS, the starting point is the date of the contract known as T, which means that each step needed to be undertaken is then described in terms of having to be completed by a specified number of market days from this date. For example, D+3 or T+5. A market day is a day on which BMSB is open for trading. Basically, there are 5 market days per week open for trading, and it depends on the BMSP foreclosure on specific holidays. What about Institutional Settlement Services, ISS? ISS is launched by Bursa Securities Clearing SDN-BHD on July 15, 1999 to stimulate the settlement of trades of institutional investors directly. The eligible institutions such as locally incorporated custodian banks and financial institutions will act as non-trading clearing participants, NTCP, to enable them to directly clear and settle securities transactions on the same day. The ISS runs parallel with the present T+3 rolling settlement system. The ISS has several salient features, which are: the settlement of funds will be directly between BMSC and ISS participants, all settlement instructions will be transmitted electronically, and shares delivery or receipt will entail crediting, debiting of corresponding CDS accounts maintained directly with NTCPs. Next, we go into the Central Depository System, CDS. CDS is a central for handling of securities for Malaysian stock market, operated by Bursa Malaysia Depository SDN-BHD. Under the CDS, shares delivery is carried out based on fundamental of book entry, seller's account is debited and buyer's account is credited with the relevant number of shares of each transaction. Investors use the CDS for safekeeping of shares and also for custodian and pledging services. All investors, whether individual or corporate, are required to open an account with an authorized depository agent, ADA, if they wish to trade in prescribed securities. The objective of CDS is to attract wide local and international market participants with Bursa Depository by providing efficient and convenient array of services through its network of authorized depository agent, ADA, and authorized direct member, ADM. Now, let's look at the settlement activities. They are delivery of securities, automatic buying in, payment and selling out. We will find out more about the activities under ready basis contract and immediate basis contract. In delivery of securities, for ready basis contract, it is under the T+3 settlement cycle. The seller must have the quantity of securities as tradable balance in the securities account by 4 p.m. on T+2, and the delivery of the recalled securities will take place by T+3. Meanwhile, for immediate basis contract, the settlement period is 1 day earlier than settlement for ready basis, which is T+2, in respect of which a selling participating organization, PO, must have the quantity of securities sold as tradable balance in the securities account used for the sale not later than 4 p.m. on T+1. Automatic buying in has the same settlement cycle as in the delivery of securities. Under the ready basis contracts, the settlement cycle is on the third market day following the contract date, which is T+3. As for the immediate basis contracts, the settlement cycle is T+2, which is the second market day following the contract date. The next settlement activity is payment. Payment for contract done on ready basis is conducted under T+3 settlement cycle. A selling PO must pay the seller client by T+3. Not later than 12:30 p.m. The same timing applies to the payment by a buying client to buyer PO. Regarding on the payment by the net buying PO to the BMSC, it is required that the payment is done not later than 10 a.m. on the third market day following the contract date. The payment by the BMSC to the net selling PO also applies the same timing. On the contrary, payment for contract done on immediate basis is conducted under T+2 settlement cycle. The time for payment is the same as in the ready basis contract, but it is paid latest by the second market day following the contract date. The last settlement activity is selling out. Under the ready basis contract, for both on-market transactions and direct business transactions, a PO shall close off purchase position latest by 12:30 p.m. on T+3. If buyer fails to pay, PO shall institute a selling out by T+4. On the other hand, both due date for closing off purchase position and selling out under the immediate basis contract is 1 day earlier than the ready basis contract. The next topic for this chapter is corporate actions. Corporate action is any activity that brings material change to an organization and impacts its stakeholders, including shareholders, both common and preferred, as well as bondholders. It is generally approved by the company's board of directors. Shareholders may be permitted to vote on some events as well. Corporate actions range from pressing financial matters, such as bankruptcy or liquidation, to a firm changing its name or trading symbol. Corporate actions can be divided into two categories, which are mandatory corporate actions and voluntary corporate actions. Mandatory corporate actions are enacted by a company's board of directors. The company's shareholders have no choice but to accede to the action being taken. Examples of mandatory corporate actions are stock splits, acquisitions, and company name changes. On the other hand, voluntary corporate actions are activities in which shareholders opt to be participants. Voluntary corporate actions require investors' response to be applied. Examples are tender offers, optional dividends, and rights issues. Corporate actions are carried out in a proper procedure. When a listed company announces a corporate action, such as payment of dividends, bonus issues, or rights issue, the shareholders entitled to them are those who are registered in the company's Register of Members, ROM, on the entitlement date. When investors buy shares from the market, the registered shareholder is Bursa Malaysia Depository Nominees STNBHD, because all shares in that security which was originally deposited by investors are registered in its name. However, Bursa Malaysia Depository Nominees STNBHD is a bare trustee and the beneficial owners are the depositors. Although securities are held in the name of Bursa Malaysia Depository Nominees STNBHD, the person whose name appears in the Record of Depositors, ROD, has all rights, benefits, powers and privileges relating to the securities and also is subject to all liabilities, duties and obligations in respect of or relating to those securities. ROD is a listing of all Central Depository System, CDS, account holders together with the number of shares to their credit, as at the lodgement date. A company that is going to exercise a corporate action will request a ROD from the Bursa Malaysia Depository Nominees STNBHD. Then, Bursa Malaysia Depository Nominees STNBHD will produce ROD as at the lodgement date and forward it to the registrar. The number of shares listed in the ROD should be equal to the total number of shares registered in the company's Register of Members, ROM, with the name of Bursa Malaysia Depository Nominees STNBHD. This is the flowchart of the procedures of corporate action. Next, we will go into the examples of corporate actions. One of the examples of corporate actions is issuing dividend. Dividend is a portion of the profit or excess cash reserve that a company gives to its shareholders. It is usually a percentage of the face value of each share. For instance, a 25% dividend on a share of face value RM100 would be RM25. Under the CDS, a listed company that announces a dividend will request a ROD from Bursa Malaysia Depository Nominees STNBHD as of a specified date. Upon receipt of the ROD, the company's share registrar will calculate the dividend payable and send out the checks directly to the investors. Moving on, we have bonus issues. Bonus issue is an offer of free additional shares to existing shareholders. It is issued by a company in lieu of cash dividends. A company may decide to distribute further shares as an alternative to increasing the dividend payout. For example, a company may give one bonus share for every 5 shares held. Shareholders can sell the shares to meet their liquidity needs. When a company declares a bonus issue, Bursa Malaysia Depository STNBHD will produce a ROD as at the lodgement date and give it to the registrar. The registrar will calculate the entitlement due for each account and will advise Bursa Malaysia Depository STNBHD on the number of bonus shares to be credited to each of the account holders in the ROD. Bursa Malaysia Depository STNBHD will then credit these accounts accordingly. Another example of corporate actions is rights issue. Under a rights issue, additional or new shares are offered by a company to its existing shareholders at a discounted price before opening sales to the public. It regularly takes place in the form of a stock split, and in any case can indicate that existing shareholders are being offered a chance to take advantage of a promising new development. For instance, a 1-for-3 rights issue means an existing shareholder can opt to buy 1 share for every 3 shares held at a lower price than the face value. However, bear in mind that shareholders has the right but not the obligation to exercise this right. When a company declares a rights issue, a ROD is produced. Based on the ROD, the registrar will generate the provisional allotment letters, PALs, and send them directly to the investors. The investors may exercise their right or renounce their right. After that, the registrar will advise Bursa Malaysia Depository SDN-BHD of the number of shares to be credited to the subscribing shareholders. Lastly, the accounts of these shareholders will be credited as advised. The last topic is on other matters. This topic will talk about non-delivery and buying in, non-delivery and selling out, events of default and netting. Let's look at non-delivery and buying in. A buy-in is a reference to the repurchasing of shares by an investor because the original seller failed to deliver the shares as promised. Rule 803.11 of the Rules of Bursa Malaysia Securities Berhad, BMSB, sets out that where a participating organization, PO, having sold securities in board lots, fails by the scheduled delivery time to make available in the relevant securities account, the securities in board lots as tradable balance, the BMSB shall, upon being advised by the clearing house of the failed contract, automatically buy in against the defaulting PO concerned without notice, on the market day. Buying in is conducted every market day from 8:30 a.m. to 12:30 p.m. and 2 p.m. to 5 p.m. The buy-in will be continued on the following market day if it is incomplete. Defaulting PO are prohibited from charging brokerage for the buying in against the seller in a failed contract. Besides, the defaulting PO must pay a levy of 1% of the buying in contract value to BMSB, which can be recovered from the seller in the failed contract. Next, we have non-payment and selling out. A selling out refers to the reselling of shares by an investor because the original buyer failed to make payment as promised. Rule 805.1 of the Rules of BMSB provides that in relation to Fixed Delivery Settlement System, FDSS, contracts, PO shall close off the purchase positions of their respective clients who fail to pay for their purchases by the scheduled settlement time. POs shall institute a selling out on the prescribed market day on any such securities for which the defaulting clients have not made full payment by the scheduled settlement time. Moving on to event of default, it is a predefined circumstance that allows a lender to demand full repayment of an outstanding balance before it is due. In the securities market, BMSC has the power to undertake certain action if a clearing participant is unable to meet its obligations for unsettled market contracts. Where such a default in payment occurs, BMSC can undertake actions including liquidating market contracts or selling securities. The last subtopic is netting. What is netting? Netting offsets the value of multiple positions or payments due to be exchanged between two or more parties. Netting is used in a number of settings and instances including securities or currency trading, bankruptcy and intercompany transactions. Netting can involve more than two parties, called multilateral netting, and generally involves a central exchange or clearinghouse. Rule 804.11 of the Rules of BMSC prescribes that all amounts payable by POs to BMSC and receivable by POs from BMSC on every market day shall be netted in accordance with the rules of BMSC. Rule 5.3 of the Rules of BMSC further provides that the financial settlement of securities shall be on a net basis. Net basis is defined as a process whereby monetary obligations of clearing participants are pooled and offset with each other, resulting in one final position for each clearing participant. Rule A5.9d of the Rules of BMSC sets out that the money payment obligations of any clearing participant with respect to its institutional settlement services, ISS, transactions which have settled may be netted by the clearing house, and payment of such net payment amount by or to the clearing house by a clearing participant shall be effected in accordance with Rule A5.9b. For example, if 3 of 4 investors of a stockbroking company sell 1,000, 2,000, 3,000 shares of a security and the fourth investor buys 10,000 shares of the same security, then under the CDS there will be a debiting of 1,000, 2,000, 3,000 shares from the respective accounts of the selling investors and crediting of 10,000 shares into the account of the buyer. Under BMSC, there will be a net buy of 4,000 shares for the stockbroking company, without going into detail at individual investor level. That's all from us, thank you.